The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off. Quite a surge higher yesterday from market lows in the S&Ps of 63.71. You surged to close the session out at about 64.40, and we're higher yet again. And I should say, closed out at 64.25. You got a boost immediately. Google last night, so they don't have to sell Chrome. Check out that move, right? Google up by $17 on the open coming up. We're at 226. Google have been at 212. You take a look at the longer term chart of this thing. We have a high at 215 out there. How about it, folks? We're going to open at 226, and we have the 1 to 1.618. Let's put it on a daily. Of Google, where's it bring you to? 228.63. We're at 226 right now. So Google going to get a lift as they do not need to separate, and they do not need to break up as part of their antitrust suit, so that gives the markets a lift last night, but they've continued this morning with the S&Ps up by 25 points right now at 64.50. The NASDAQ 100 up 0.7%. We zoom in. There's your boost from Google. You close out the session yesterday at 23,273. We're 165 points higher, or 0.7%. Dow in the red this morning, not getting helped by Google. Some of the other tech companies, Dow trading lower right now by 92 points, and the Russell off by 7. Bitcoin up by $400 at 111,800. Crude, how about that move? Right? Volatility yesterday, volatility today. Crude trades lower to 64.43 right now. Gold's having quite a moment. 36.22. 36.22. It's not stopping, folks. And if you're looking for the 1 to 1.618 expansion, 38.70's potential there. This could be a breakaway. And that's your weekly. You take a look at the daily. How about that volume? How about that volume yesterday? All right, that's how you do it, folks. Look at that volume, man. 363,000 contracts. Double what we've been doing. That's how you break away from the 3,500 price point. And we'll see if we can get some follow through today. But gold's having quite a moment right now. You jump over to silver, up by 27 cents. Same thing on silver, pushing $42. We're at 41.86 right now. Jump over to some of the other metals. Copper, not so much. Copper had that collapse on volatility. Tariff fears on a weekly. Put it back to a daily, though. Pulling back a bit on copper, and you did have quite a little day of volume yesterday on copper. Little price spread and a lot of volume, as was the case with many other commodities out there. All right, let's jump to yields. And right now, we're talking about a yield of 4.28. Okay. Lower price, higher yield was the theme yesterday. The dollar surged higher, all the way up to 98.60. We're trading at 98.35 right now. We'll talk to our man Teddy Cakestack coming up about 40 past the hour. Always a good conversation talking currencies, talking commodities. We talked to him at 40 past in about 30 minutes from right now. Look forward to that interview, as always, on Wednesdays. Dollar at 98.35 right now. We get the 10-year at about 4.3% right now. And yeah, we have the 30-year right near that 5% mark. 30-year right now at 4.96. Long yields in focus. All right, you got to kick it off with Google, man. So, now, what the government said here is that, yes, they were monopolistic. Okay? Oh, boy. But they did dodge the worst of the worst. And it was even more than that they dodged. There could have been things in between Chrome being sold and where they ended up as well. But yes, the judge ruled against the government's proposal to break up Google, including a forced sale of Chrome. And, you know, we do an hour-long show every day. I mix in a lot of personal, anecdotal statements, right? And I'll tell you, folks, I use ChatGPT all the time for searches now. All the time. I use Google occasionally. So to argue that they have a monopoly at this point that they need to break up, and there it is. The emergence of Gen AI changed the course of this case, and I would make that case as well. If you told me this 2 years ago, I say, yeah, man, why would anybody go anywhere else? Google's had the only game in town for 20 years. That's not the case anymore. I find myself that I now need a back and forth on my searches, right? I don't just Google 4 words and then do the research myself. I start the search with the prompt in an AI agent, Gen I, and then I further that with further inquiries down the line. That's where the world is, folks. I encourage you to get into it. But yes, as it says, a setback for the U.S. government in its bid to curb the power of those big tech companies. Google, of course, praised the decision, but said they disagree with the earlier ruling that it monopolized online search. You better believe it monopolized online search. But technology has caught up, and right now, yeah, as the judge said, it has changed the case for that. Now, they have to share data, okay? But the court did recognize that divesting Chrome and Android would have gone beyond the case's focus on search distribution and would have harmed consumers and our partners. It barred exclusivity deals, okay, but they're still going to be able to pay partners. Yeah, so they're still going to be able to pay Apple if they want to, but Apple's making deals with OpenAI, ChatGPT, right? So, and yeah, this is what slap on the wrist is, as one analyst put it on Moffett and Nathanson. It could have been a lot worse, obviously. This comes as a home run for the status quo, and the status quo has been very favorable to both Google and Apple. And there's your Apple lift. How about that, right? You got to love it. Google and Apple. Apple keeps getting to pay for all of it, and Google keeps getting to take in all the money for all of it, and Apple's pushing 240. And that's where we were at the beginning of the year, chopping around. We hit 260, you chopped around to 240 before you fall off, so Apple's going to open up $10, and there's the reason why the NASDAQ 100, folks, is pushing those highs. You jump over to some of the other big flyers. Amazon, they're flat this morning. You jump over to Microsoft, slightly in the red, right? So it's a very isolated case of Google and Apple. But yeah, I encourage you, folks, if you haven't really gone down the rabbit hole yet, do it and get over to whatever chat bot you want to play with, whether it's OpenAI, ChatGPT, Anthropic, Grok, whatever it is, folks, okay? Because I'll tell you, Google's got a problem, and Google's great, all right? But to counteract the search aspect alone, right? We've talked about whether it's Google Gemini Ultra, they're charging $299 a month for all the AI generation tools. If you do any type of video content creation, folks, they have a tool called Flow, which is amazing, that allows you to produce content. And so, yes, they're going to be there. But when it comes to search, man, even Google. I go to Google. They've had that AI, whatever they call it, on the top. It doesn't work, man. The user experience is not keeping up with some of the other AI gen chatbot agents out there. All right, folks. S&P's up by 25. NASDAQ up by 175. We got a lot to cover. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the S&Ps up by 25, NASDAQ up by 173. And yeah, we checked back in. Google pushing 226 right now. It's pretty remarkable, right? You're going to have Google opening at by far record highs. So Google's going to have a gap from 215 to 226. How about that, right? Doesn't mean it has to get filled, but boy, you are gapping above all-time highs right now. You're doing it in magnificent fashion. You have a lot of volatility that's going to be unknown, pulled out of that equity, right, in terms of that looming where we were. There's one more. There we go. Okay, and now you get into when you talk about the search function of things, okay, and it's interesting. You talk about a couple stories popping up recently. This one was yesterday. Anthropic. Okay, when you just talk about AI, the competitors everywhere in this area. How about $183 billion valuation? This was yesterday, okay? And then you have the story popping up today. This one, yeah. It's just nonstop. These AI companies that are coming for everything, okay? Translation startup. I mean, translation bots, that one's basically already done. You're going to be able to talk in any language you want, in any voice you want, right? An AI agent, and this is coming for, whether it's OpenAI. Now, this company is only valued at a couple $2 billion, I think. Started in 2017. Yeah, here it is. Valued at $2 billion, okay? Founded in 2017. And, yeah. It's designed to complete repetitive, time-intensive tasks across a wide variety of functions. Okay. DeepL agent can be used in various teams from human resources to marketing. Yeah. So it's nonstop, man. That is a big win for Google. But just like, and you know, the tough part about this, folks, is that, yes, everything is intertwined, okay? They're going to have to share some of their data because data is everything right now. And so there's lots of benefits for them down the line, right? Now, that's why they have to share some of that data. But when it just comes to search, they've got a problem. Now, Google owns YouTube. There's nothing like YouTube out there. Okay, that's a generational product on its own. YouTube is like the new television set for everybody. But when it comes to search, man, the game has changed, and they have not caught up. They're not keeping up. Let's put it that way. Because even right now, I find the back and forth. So when you search something in Google, you get that little top search result that gives you like an AI feedback loop or whatever it is. It's not as good as when you're just having a nice back and forth with a ChatGPT agent. Yeah, they also own Waymo. Great point, Duffy. We brought that one up before in terms of the amount of miles that Waymo is running right now versus what Tesla's doing. And if you put any type of valuation on Waymo versus Tesla, they got a lot going on. And that Gemini Ultra, you know, the way that they have those tools, folks, okay, they broke the internet. They did it. They broke the internet with all those AI videos, okay? They were the first one where you could produce the videos with voice, right? And so they got a lot going on. All right, we jumped to some retail. How about Macy's getting it done? They were up as much as 10%. We'll take a look at the chart. Tops earnings estimates and raises the outlook. Yeah. They expect earnings 170 to 205. They bumped up the bottom and the top part from 160 to $2 was the range. They're now looking for $170 to 205. Revenue slightly higher as well, and ever so slightly, right? 21.15 billion versus 21.45. They were looking for 21 to 21.4. So they had a $400 million range, and now they have a $300 million range, slightly higher. But yes, they slashed the full year guidance last quarter, and so the market happy that we have a little bit of certainty here coming down on the tariff volatility. For the quarter they just reported, 41 versus 18 cents, and they beat on revenue as well. And they had net income of 87 million. The group of 125 stores that Macy's had chosen to focus on with higher staffing and renovations outperformed the broader Macy's brand. Comp sales growth of 1.1% on an owned basis. Look at Bloomingdale's. Hey. All good styles come back. Look at Bloomingdale's. 3.6% comp sales. Blue Mercury, comp sales of 1.2%. Bloomingdale's having a comeback. Look at that, baby. $28 million increase in credit card net revenues. Uh-oh. Is everyone piling up cash on their Macy's credit card? All right. We take a look at Macy's shares this morning. All right, look at this one. This is where channels or just trend lines in general. So I'm going to go back and see where this trend line is from, but I can tell you right away, folks, you ever pull up a chart like this and you say, all right, it's touching this channel line. Let me see why I have this channel line on the chart. And I say, okay, where's this trading at right now? 1550, 1582. And there's that trend line, man. 1632 right now. We back it up. That's 3 years. Yeah, look at that. Right from the peak of 2021, man. Now, you could probably make the case that there's a bottom part of this channel as well. Right? Where's that line up? Little linear regression, somewhere like there, potentially. Okay, and we're gonna touch that top portion, so be careful. You're pushing about $16. You want to see a break above this channel line, come back, test the channel. That'd be a nice breakout. All right, let's talk a little bit of yields. So this one, so global borrowing costs mount, right? You got a lot going on in this market right now. 4.999. Yeah. That's the 30-year bond, man. 5%. We're bumping up against it. There it is again. We were just at about 4.75 coming into August, and we're all the way up 5 on the 30-year. Hold on, I got a CLO story up here. Oh, shame on me. No, that's my CLOs. I was already ChatGPTing. All right, maybe it's just right at the top. All right, forgive me. I got to find the CLO story. Oh, man, they're pumping out a lot of... Is this it? Oh. Nope. Here we go. Wait. That's it. All right, perfect. Yeah. How about this one, baby? $320 billion of bonds backed by loans this year through mid-August, a record volume. We'll talk about this. CLOs. We're coming back, folks, for the open.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open right now. We check in on Google. Up by 6.6% or $14 to the upside on their ruling that they do not have to break things up and get rid of Chrome. And Apple shares up by about 3% right now. We jump around to some of the other players. Tesla up by 1.4% right now. Microsoft down by 0.3% right now. Jump over to Meta shares up by 0.6% right now. Amazon in the green barely by 0.1% right now. Jump back to Macy's on theirs. Numbers up by 15.2%. There's a lift for you. Jump around to some other retailers. TJX, they're flat right now. Kohl shares up by 1.6% right now. Checking on Mickey D's, down by 0.1%. All right, this is an interesting one, talking about CLOs. Okay. And what's amazing here is, okay, is that this is accelerating at a time when it's driven by demand, okay? And this is collateralized loan obligation, right? CLOs, okay? And the way a CLO works is, let's see if they explain it up here. I was checking out a couple of them. And so CLOs are structured finance products, okay? And what they're doing is they're bunching in loans, right, that are backed by collateral, okay? Now, what's remarkable here is investment firms sold more than 320 billion of the bonds backed by loans this year, okay? And it's amazing because a bond is technically a loan. So it's a loan backed by a loan, right? That's what CLOs are. Record volume, okay? Collateralized loan obligations. All the new CLO creation is translating into nearly bottomless demand for leveraged loans, a type of debt that private equity firms and other buyers often use for buyouts and mergers, okay? And so what they're paying is basically the minimum that they're ever going to pay, which is right now those loans, okay, were sold at just 1.75 percentage points more than the benchmark rates. That's the lowest margin the market will bear. That's basically the floor, 1.75. I know, right, Double Broad? Loans on loans, they're on fire. Folks, get the spikes up, okay? Doesn't mean it's going to happen, but those headlines should give you a little pause. Excuse me. Now, it gets even more dicey, okay? The number of loans priced at that level is more than double the amount in the same period last year. There are still relatively few available to buy, but the firms are priming for more of the debt to be sold amid a recent pickup in mergers and acquisitions. Markets on full steam ahead, okay? By many measures, it could be a terrible time to create them. The potential profits from bundling loans into bonds are the slimmest in about a year, okay? But money managers wagering there will be richer profits available, and CLOs are rushing to lock in the cheap funding costs today. Selling CLOs is inexpensive because funding costs are relatively low, so managers would rather greenlight deals today, okay? Now, let's get in the last part of this, okay? Yeah. CLO investors are eager to spend dedicated capital. This is where it gets wild. You have Wellington, Mid-Ocean Partners, Golden Tree Asset. They've raised money for CLO equity investments. They need to deploy it. You have an active bidder that's in the market, right? And so why not be a seller in that market if you know that people are creating funds that have to do it? Yeah. So keep your spikes up on this one, folks. Yeah, we got deal making going everywhere. But yeah, loans on loans coming back in vogue. Yeah. All right, and we get a little Fed action today as usual. The Senate Banking Committee is to hold a confirmation hearing on Stephen Moran. And this is the one that's really not that controversial, right? You had a Fed chairman step down. The president's nominating somebody else. Moran seems to be a pretty respected, reasonable fellow. He'll probably get in there. But nonetheless, we'll see some headlines play out today. And yet, there's very little. The timetable is not going to be enough to delay him. That he'll probably be in there by September. Because really, this has nothing to do with Trump trying to take over the Fed. And, a president's never fired a Fed governor, folks. And there should be a process for cause, right? That's the part that I don't understand. There needs to be a process. People need to have a right to defend themselves when somebody alleges that they're a criminal, right? All that stuff. That's the part of this that needs to play out. But you're going to see it today. It's probably going to be a sideshow to a certain degree, but realistically, this one really doesn't have a lot to do with the sideshow going on, as you have a governor that stepped down willingly, and the president is going to fill that role. And he's put somebody in place that, probably has the credentials to fill that role. Two wildly different segments from the political nature of the Fed. It's tough, folks. You want to say more, right? But then everyone in politics goes crazy. You want an independent Fed, folks, okay? And you can make the case that the Fed is not doing the right thing. But the only other alternative is having a president every 4 years that sets the interest rates. And so that's where I struggle to understand where the end game is for those that want the president to control the overnight lending rate. History repeats. We have a short memory sometimes. See how it plays out, but you're going to get some headlines today. S&P is up by 23 right now. Dow charging back a bit. Walmart up by 0.3% right now. We jump around to some Dow stocks. Look at that acceleration on the open. UNH shares up by about 0.1% right now. Goldman down by 0.1% right now. Morgan Stanley up by 0.3%. Jump around those banks. Bank of America up by 0.1%. All right, folks, we're coming back. We're going to talk some currencies, and we're going to talk to our man Teddy Kegstad. We get the dollar. 98.29. Don't go away, folks. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps up by 24. We get the dollar right now at 98.35. And right now, folks, we're going to jump over to our man, Teddy Kegstad. Folks, you can check out Teddy's outstanding Tiger Forex report. He's got new issues every Monday. Updates throughout the week when warranted, folks. You gain access to an archive webinar in there as well. It's only $97 for the month, folks. It comes with a 30-day money-back guarantee. Check that out right under the newsletter tab. And don't forget, under the services tab, a couple of great webinars. Capitalizing on time with calendar stock option spreads, $97, and Japanese candlestick pattern stock and option strategies right there under the services tab, folks. Two great webinars. You gain access to them. You can watch them as many times as you like when you purchase them, though, right on your account page. Teddy Kegstad, good morning.
Good morning, Tommy.
So, where do we kick things off, man? We got 2 weeks until another Fed meeting. I know we had Jackson Hole since the last time we talked, and what do you think about this market, Teddy? What are you looking at, please?
Well, for the currencies, I think it's going to be a flatline trade until after the Fed meeting. It's going to be a very boring next 2 weeks.
All right. So what do we do as traders?
Well, as traders, you got to wait for a valid signal is what you do. You know, I mean, there's a little bit of swing going on in the Aussie and what have you, but for the most part, you know, we're in a holiday week to begin with. So Monday was a dead trade. Sunday night into Monday, you know, we didn't really start to get the currencies moving or any of the markets moving for us until, you know, late on Monday morning, early Tuesday or late Monday night, early Tuesday morning. And today so far is pretty quiet. You know, I mean, the expectations are waiting on the Fed. You know, yields pumped up a little bit, you know, this week a little bit. You know, are leaning towards going a little higher right now. But it's pressure right now. I think they're just, you know, testing the barriers of the range that they've been in right now. There's no fundamental or technical reason for any of the currencies to really break out one way or the other. You know, everybody's waiting on the interest rate moves. And then the question is, are other central banks going to also act in tandem? So, which is that's a nullifying effect also. So, so we'll see what happens. You know, I think, you know, that we just right now things are too vague as far as trying to set a trend. You know, I mean, this is a very tough period. You know, when markets are in range trading conditions, you know, I mean, everybody wants to make money every day, but, you know, trading is an average over time. You can't look at it on a daily, weekly, or monthly basis. You know, I mean, you go through periods like this. You have lulls, you know. I mean, granted, it was summertime. I wouldn't say we had a summertime trade necessarily. It's just it's a conditional thing. You know, fundamentally, too, you have a lot of cancellation effects. So, you know, we have the fundamental factor with interest rates that's looming right now. We know that fundamentally, once they start cutting rates, that should suppress the U.S. dollar a little bit, as well as, you know, obviously lift bond prices and what have you. Then we'll start to have a little bit of a trend. Until they start doing that, you know, we're hanging. You know, there's nothing to really drive, you know, the economic numbers. If they were to start moving towards extremes, whether it was positive or negative, then perhaps we can spark a trend and start, you know, getting some sort of at least short-term moves in place. But right now, there's just no reason. Now, the good thing is that, especially for the currencies, currencies tend to trend 70% of the time. Well, they've been going sideways now for, pretty much 5-6 months for the most part. Some of them are trending. I mean, the U.S., for instance, look at the U.S. dollar Swiss. It has been trending lower, but it's been a very lazy bear. I mean, it's a sell rally forecast, but it's, to the downside, it's a grind. So yeah, to work the short end on that trade, it's a good idea, but you have to keep your expectations rational. You're not the move that you might wish to occur over the course of a few days or even a week or two. It's going to take a whole month. You know what I mean? So, yeah. And that's where you have to start weighing. Trading is about making money. It's not about participating every day. I mean, the key to success in trading is maximizing your risk-reward ratio. It's like I tell people, right now, I'm used to trade. When I put on a trade, my expectations are to make 3 to 5 to 1 dollar that I risk. And I tell people, right now it's the opposite. I'm like, I'm not going to lay $5 to make 1. I mean, I encourage other people to do that out there, honestly, because it helps people like me make money easily. I think it's the dumbest thing you can do, but then I don't care what people do. I really don't.
Sure.
I care about whether I make money or not. I mean, I wish everybody would make money and do the right thing, but let's be realistic. That the only reason that we can pull money out of the market is because of people making mistakes.
Two
how do you
sides
make money
to every trade, right?
Right. How do you make money at a poker table off of other people's mistakes?
Yeah.
Predominantly, right?
You're not making it off the house.
No, you're not making. Yeah, you're not making it off the house.
Exactly. No.
So I mean, and that's just how it is. It's an environment. I mean, for instance, look at the Japanese yen. At least if the crude oil market would be swinging around, we would get a little action there. We can't even get the crude market to move. I mean, so it's like, you have multiple markets that have gone into flatline that actually help.
Can I just right there, because and I understand it so well, and I ask you to explain it so many times, but you do it. When you talk about that, can you just elaborate when you say, if the crude market get going and then the yen? Because we always get new listeners. Just, we got a couple minutes, man, because I think that one alone, if you could tell the viewers why, if crude's going to catch a bid, what's going to happen to the yen when it comes to the dollar? Yeah.
Sure. Okay, so like for instance, we're talking about this sideways trade. Crude is the great thing to look for that currency. We know that if crude starts to, for instance, catch a bid, and start rallying, okay, then that's going to suppress the yen. So that means the U.S. dollar yen trade should get a nice bullish spike off of that. It's an inverse relationship, just like you have with interest rates. Versus like right now, as a whole, I'm a bear on crude oil, even though it's been going up for the past 2 weeks. It's only coming off of its lows. It's coming off a lower move low. And right now it seems to be making a lower move high, which is indicative of a lower trend. If that's the case, as crude oil continues to go down, that strengthens the yen, which means the U.S. dollar yen trade should trend lower as well, fundamentally because of that, because the interest rate variable is doing nothing. So the crude would help to the bears in that case, which means if you're a bear for the U.S. dollar yen right now, then you have an edge. So you know that if all of a sudden, like crude oil is down today, if it starts to take out, say, yesterday's low today or tomorrow, and it goes into Friday with that, you should expect to see the U.S. dollar yen trade a little bit lower, meaning a weaker dollar, stronger yen because of that functionality. So the cause, and the main reason is because Japan is oil dependent. They don't produce oil, so the price of oil and it's also traded in dollars predominantly. So they have to move yen to convert yen to dollars to buy crude. So all these fundamentals come into play, and that's how you can help at least guide a short-term trade. And that's one of the markets where right now I am eyeballing the yen and watching crude. Like for instance, yesterday was a nice little rally that happened in crude oil. Okay, so that one right there, that's a situation where you look at what happened with the U.S. dollar yen. The U.S. dollar yen also got that rally. You know what I'm saying? So that's why you look at a day like yesterday, the other currencies moved a little bit because you were coming off of a holiday market, but they really moved and died, whereas the U.S. dollar yen actually had a trade because oil was moving. And that's where trading is patience. So you have to wait for those things to get a valid signal, and then you can make some money. Otherwise, you know what you do? Go play golf, go wash your car, or do whatever.
Patience. Patience, folks. I love that. I love that walkthrough, man. The first time you taught me that just even changed the way I think about the entire market, man. So I appreciate it.
Right.
Teddy,
and
thanks so much,
losing
man.
Money, just send me a check.
Not happening, right? We'll talk to you next week. Thank you again, Teddy. Folks, check out the Tiger Forex Report. We're coming right back.
This works for some. It oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's up by 20 points. NASDAQ up by 128. Always a great conversation with Teddy. And we rushed it a little bit at the end there, but I love when he does that walkthrough. And it really did kind of change when you just look at a currency. I mean, how many people do you think, folks, that are trading the dollar yen, and I hope it's a lot, but I bet it's not, really understand the driving forces of the commodities, right? The consuming nations and the producing nations, okay? America is a producing nation of oil. Japan is a consuming nation of oil, right? So what happens? And Teddy explained this all, and it's great. And you understand how, and it really did change the dynamic of, oh, this is currencies, right? And it ties into yields in the same way, right? Just like when crude prices go up, well, what happens? Well, you need to, America is the one producing that crude. You're going to pay America for that crude. You're going to pay America in U.S. dollars, okay? When America lifts our yields, okay, it's the same thing, right? What happens when our yields go up? You need to buy American dollars to buy our yields to a certain degree. So it really kind of changed the fundamental nature of supply, demand, currencies, and how those currencies are used when whether it's purchasing commodities, fixed income, and anything that trades in those currencies. Check out that Tiger Forex report. He's got a couple webinars that are outstanding out there as well. And if you didn't quite follow all of it, folks, check out the Tiger Forex report. He puts it out every week, walks you through it. You'll understand it. It's a great education. And this market, look at Google, baby. Now, man, from 142 in April to 230, and then you're doing exactly 1 to 1.618 expansion, and we hit it, baby. 229, Google up by 8%. And yeah, some of the articles out there today saying this might even be a bigger win for Apple. Now, you really had it hanging over Google's head, so they're up by 8%, but Apple up by 2.5%. Google at all-time highs. NASDAQ 100 up by 110 points right now. And we're going to hand it off to our man, Basil Chapman. Folks, have a great day. Have a safe day out there. Stay tuned for Basil. We got Basil coming up next. We got our man Steve Rhodes at 11. Fast Market at 12. Larry Pesavento at 1 o'clock. And I'll see you at 3 o'clock, folks. Have a great Wednesday. I was going to say Tuesday. Shortened week. Have a great Wednesday, folks. We'll see you at 3. Stay tuned for Basil.